Okay, there we go. Okay, let me share screen. And I told you, please, when you come here, make sure your video is off. Button for video, put it off. Olivia, put off your video. Make sure you put off videos. Are we together? Hope we are together. Make sure your videos are off. Make sure your videos are off. Yeah, videos should be off. Okay, thank you. Okay, let me share screen here. Let me share screen here. Okay, I believe the screen is on, and here we are.
Yes, it's on.
Here we are. Now, one thing that we need to know, the foundation of this business of crypto trading, the foundation of it is market analysis. Market analysis. The trade settings, the risk management will come later. I think I'm right. The market analysis should be first in your head. Then risk management, trade settings, those are minor. They are minor. So the major point, it should be, can you go to chart and know which coin can I trade? That is the main thing that we need to focus at. Can you really go to chart and know that I can definitely trade this coin? That is what we need to understand. Simple. Because when you can be able to identify which coin is going to give you money, then settings is just a mere reason. You get the point? That's why we change settings according to the signal. You may do analysis and you see that the coin can definitely drop like 5%. Then I will be forced to change the settings. So the settings will be according to the behavior of the market. Have you picked that? That's why every time and then we change settings according to what we have seen from analysis. Are we getting the point? So let us all know that the foundation of this business, it is to understand market analysis, or which coin can I trade. If other leaders are not available that are sharing with us signals, can I be able to trade? Who is saying he can be able to trade? Let me see in the chat. Who is saying I can be able to pick my own trade and I trade it? Then if you cannot be able, then you type 2 in the chat. Type 2 in the chat if you can't be able to pick a coin. And if you can be able, then type 1. Hey, Sauro can't get the coin. Oh my god. Oh my god. No. Hey. That's why I was asking myself yesterday how that works. Oh my god, you people. So you want us to sleep here? Okay, thank you so much for the feedback. I really appreciate when I see you replying. That means you are seriously following, and what we are talking about, you really need it. Thank you so much. Now, let me tell you one thing. First of all, in your phone, you must be having what we call the trading view. And make sure you register with it such that you can be able to use it. That is the first tool that you need to be having in your phone. After having it in your phone, add some coins. They allow you to add 60 coins. Are we together? They allow you to add 60 coins. Then from there, you open any coin. When you open it, it may be looking like mine here. At times, it is always in a day time frame. In a day time frame. You can always change the time frame. When you are using phone, the time frames are at the bottom. You will see either 1 day, 4H, 1H. Those represents what? Time frame. Are we together? So, you can change the time. You can change to 4 hours. You can change to 1 hour. You can change to 30 minutes. Are we together? Then from there, you will need some indicators that you need to put on that can guide you apparently. Because I believe if you are new, you may take time to understand the support and resistance. But trust me, when you put the indicators, it will be easy for you to identify a quick trades. Are we together? How to add the indicators? On your phone at the bottom, you will see three dotted what? Dotted point. They are dotted. Dots, you can call it dots at your bottom of your phone. When you are on trading view, you open the chart like this, then down at the bottom there is 3 dots. Those 3 dots, when you click them, you will see the word indicators. Indicators. You click on indicator. When you click on indicator, automatically it will take you here, like here, the way you are seeing mine. Now at the top, you will see where to write. It will be looking like this. So on search button here, I write there the indicator that I want to use. If I want to use the Fibonacci, I would put it there. If I want to use smart money, I will definitely put it there. Then after writing, for example, if I write like Fibonacci, you can call it Fib. If I write Fib, you see on the list, I have Fibonacci retracement, auto Fib retracement, then auto Fib extension. But for us, we use the auto Fib retracement. Okay? When you click it once, if you want to put it on your favorite, behind the indicator, you will find a star. Make it yellow one. When you make it yellow, meaning it has been added on your favorite indicators. Are we together? Then from there, when you click it once, automatically it will be added on the chart. Automatically it will be added on the chart. If you want to put smart money, you write there smart, then money. Smart money concept. Make sure you look for the one that is having this Lux Algo word in front. Are you seeing this word? Lux Algo. When you search, they will bring many smart money concepts. But what we are looking at the one with Lux Algo. Lux Algo. When you click it once, or before you click it once, you can add it to your favorites. Then when you click it once, it will also be added on your chart. Are we together? It will also be added on your chart. From there, you will find them here at the top here. At the top here. This is the 2 indicator we have decided to use. And if you have any other indicator, you can also remove one and you add one, because they only allow you to add 2 indicators. Are we together? Hope we are together on that. Now from there, you need the settings of these indicators. Before you put indicator, you must first understand it and you must be having its settings. Okay, with settings you are good to go. Are we together? Now when you put these two indicators at once, they will definitely help you to know, is it the right time to trade or not? Are we together? Is it the right time to trade or not? Because I know you will be new at that time. At that time you will be new. You may not be able to understand where is the support, where is the resistance. You may not be able to understand those things. But these indicators, for them, they will definitely help you. I have been using them, not only that I understand the indicators only, not really. It is not like that. Wobbler, they ease work. Are we together? They simplify work for you. But even though they are not there, we can also trade. You can also trade. But currently, we put them to simplify work, to ease the work, such that we can be able to get the signals as quick as possible. Not first draw the support, draw the trend line, draw the resistance line. You are wasting time. You are wasting time and coins are moving. So, alongside these indicators, that's when you will now start learning slowly how to draw the supports and resistance. And please, I beg, trade when the indicators are showing you to trade. Trade when it is the right time to trade. If it is not, then don't trade. Are we together? If it is not, then don't trade. Now, I'm going to teach you one by one what we follow to trade. And I told this is the foundation of the business we are doing. If you don't know this, then you must be always waiting for the signals. But if you can be able to understand this, then you can be able to trade on your own. You wake up at any time, you trade, not waiting for the signals. And that's what we want you to understand, all of you, that you can trade on your pace without waiting for the signals. Are we together? Because when you learn this, you have a skill. And this skill, you can definitely teach this skill to your children. Are we together? And this skill can definitely pay you money. Okay? Now, where the market is currently, this is where the market is. Where you see the dotted line always on your chart, that is the current price. Whether the dotted line is red, whether it is green, that is the current price. Currently, the price is here. And now, another thing that you need to understand on this chart, each candle you are seeing here is representing the time frame you will choose. If you choose 1 hour time frame, each candle will be representing 1 hour. Whether it is small or big, it will be representing that time frame you have decided to use. Currently, I'm on 4 hours time frame. If you look at the top here, I'm on 4 hours time frame. Therefore, each candle you are seeing here, it is for 4 hours. No matter how big it is, no matter how small it is, it represents the 4 hours. Hope I'm clear. Now, last time we talked about the Fibonacci. How to trade Fibonacci. We talked about it, okay? Now, we said that when Fibonacci is showing you 100 down, 0 up, automatically that is an uptrend. That is an uptrend. 0 is up, 100 is down. And we said we must trade when this market comes back halfway of the distance. What am I meaning? I'm meaning here, the market will move all the way from 100 This is 100 line. From 100 to 0, 0 is here. 0 is here. Now, it will respect the area. It will come back. We agreed that when it comes back, let it touch 50 line or 61 line. Are we clear? Let the market touch 50 line and 61 line. One of them, if you find it there, then you have a clear picture for the market. When you enter the trade, your target must be this line of 23. Ladies and gentlemen, I want to see in the chart. Is that one hard? Is that one hard also? Just to wait for the market to drop down on the 50 line and you enter the trade. Can you imagine now you tell me that that one is very hard, I can't get it? Even though you were being last in the class, you cannot fail to pick this. And this time there is money. You are dealing with money. The other time we were learning to be a doctor. Are you a doctor now? Yeah? But now, we are talking about money. Are we getting the point? Someone said settings for smart money. I think we will talk about that. Are we getting the point? Now, just wait for your coin to move all the way from 100 to 0 and let it drop. Don't chase the market. Let the market drop halfway of the distance. And now, the drop will come in this way. I was jazzing with someone. Please, put off microphone, guys, if you don't have questions. Microphone is off. I'm hearing someone is putting on microphone. Put it off. I was jazzing with someone yesterday. She told me, you know what? Coach, you told us that drop must be 15% according to the signal. On my signals, we normally see 15% drop. But if you know that you have been attending the classes, I think I've ever talked about that several times, that 15% that is always there, it is just for emergence and it is general. I put it on all signals, but put it in mind that it is for emergency for those who are new. But if you understand the market better, then you must go and check. They have shared this coin. But how can I know the drop? For example, if I come and we trade from here, we target the line 23. We are going to trade it. For example, like this, we entered here and we are targeting this line. It is at 2.2%. Altogether 2.2%. My drop, I have to look at this discount level. Where is it? It is here. Now I will definitely measure from where I entered from to discount level. Which percentage? 6%. But at times you may find that the discount level is at 30%, or it is at 20%. The more the drop, the more the risk. If the drop is too much, just know the coin is too high. It is simple. If you measure from your entry price, and you see when you measure going back to the discount level, broke, and you find that the drop is 30%, my dear friend, that percentage drop is too big. Maybe if you have like 15 margin calls, maybe if you have like 20 margin calls, but why do you want to risk too much? Make sure when you are going to enter a coin, let the discount level be nearby your entry price, such that you save your money. That is risk management. Because we all know, if market refuses to go to your direction, it will definitely come back either to the next block or to the discount level. To avoid all that, measure up to discount level. Whether you have many blocks in between here, you just measure up to the discount level. Therefore, at times the coins I share with you, they may be having a drop of 20, but me, I may not measure them because I provided a strategy that can cover 15%. But in your mind, you must know that 15% may be small or may be big, or it is not enough. Are we together? According where the discount level is. Therefore, you must be having a little knowledge. After sharing a signal, you also go there and measure which could be a drop that I can consider. Are we together? The drop that I can consider, which one can I consider? Don't consider the 15% that I put on signals. It is for emergence. Are we together? Now, I think we have understood now how to measure the drop. This is the drop. If you don't have the blocks, you don't have smart money, you don't have Fibonacci as an indicator. For you, you are trading under support and resistance. Automatically, even though I put off these indicators, let me put them off. Okay? Now, I must know, even though the indicators are not there, I must consider this point here, here, and here. Then I draw the line. It will be my support. I draw the line like this. This is my support. Without indicator, this is my support. And my resistance, this is the main resistance. This point here. This is the main resistance that I can consider apparently. This one. Now I will know between these two lines, this one and this one, it's where I'm supposed to trade. But after confirming my entry point, that's where I will trade. Are we together? We said that following the Fibonacci, we have to wait for the market to retrace halfway over the distance. And when you look at this point here, where the market is, we can say the market tested this area 2 times, here and here. Therefore, there is a reason why the market should respect this area, and we draw like that. When you draw like that, and you see the market breaking the level here, either retesting or not, just know it is looking forward to the next point. You can look at the next points that you can consider, because we can see that market rejected this area and it increased to this point. Now, when you look at those 2 points, you can say, you know what, this should be my first target. Are we together? That should be my first target. After entering here, after closing above this line, meaning the line will act as support. My target is here. Then my drop, don't forget, go back to the support. Is this one also hard? Is this one also hard? You don't have indicators, but you have used the support and resistance to know where to enter, because of course we must enter after breaking a line. It may be support, it may be resistance, according to the direction you want. And now at this time, this was resistance. By the time when the market was down here, this line was resistance. But after breaking it and closing above it, it turned into the support. It is now support. Now, when you are dealing with the drop, don't measure up to the support line here. We want the main one. The one which is 2 down. It's the one we consider. All together, it's the one we consider. Therefore, targeting this area, this is the minor take profit. Minor take profit, but here we can call it major take profit, or the main take profit is up here. All together, if you can be able to wait up to here, trust me, whether when market will come and break this area, because it's a matter of breaking higher highs and lower lows. Therefore, after confirming our breakout here, we expect market to respect the structure. Let it test here and break, then the next point will be this area. You can definitely put this coin on cycle mode, having a drop of 12%, and there you go until you hit this level and you collect. You would have collected your 19%, and trust me, if you put it on cycle mode, it will be more than 19%. Okay, because it will drop, it will again move up, it will drop, it will move up until here. Therefore, you are buying, selling, buying, selling until we reach here. It will not go straight without buying the margin calls. Therefore, if you trade it on cycle mode, you are on right point, because you will collect more money from the market. If you are on one shot, therefore, for you are taking your 5% here, or long-term trade, you are looking at 19%. You are waiting the whole of 19% at once. But the one who decided to put it on cycle mode, while for you are waiting without making money, for him is making money, while is selling and buying again. Selling and buying, buy, sell, like that. That is the difference. On one shot, you are waiting for this market to come at this area once, and you collect your 19%, unless you have margin calls and this coin drops again. There you can buy and sell. But the one who is trading on cycle mode, he can buy, sell. When it drops, then he will buy, then when it is increasing, sell, like that. All together. So this is the way you can definitely trade without indicators. It's a matter of breaking the lines. Your lines, those are the important lines, and we call them support, resistance, trend line, any, according to your understanding. Are we together? Now let's put it on our indicator here. Let us put them on. When you put them on, the indicator is showing you that here at this point we have a bearish block. And my dear friend, you must first respect that you know what, let us first collect this 8%, which is at this block, because in most cases the market will have to respect this block, and it will respect it again, it will drop, then it will get momentum again. That's when it will come back and break it and go to your final target. You can see that we have premium here. The smart money has marked for you that we have premium here. This is a equilibrium. Market moves all the way from a discount to equilibrium. That's what I told you last time. That when you want a long-term trades, you want a big percentages. If the market is still below equilibrium level, then after entering here, maybe if we have decided to enter from here, I can definitely, for long term, wait for market to come here. That was our 10%. And now we would be almost getting out. Are we together? That's how we decide. For you may decide to say, you know what, I'm going to follow the Fibonacci. Following Fibonacci, your take profit is here. Following smart money, long-term trade, your take profit is here. It's you to decide what do you want. But make sure for long term you are coming from discount, you are targeting the equilibrium. Let's not keep on this coin alone. We can look at others. What are they telling us? Is it the same? Let us check. Okay. Now on this, it was also in uptrend, but at times market may not come halfway of the distance. This was the movement, and here you can see market stopped here. Can we see? It stopped here at the line of 38. It never tested our 50 line. Are we getting the point? At times the market, it can refuse to go to your area. Are you seeing? The 50 line is this one, but the market stopped from here. Therefore, at this point, for you couldn't trade. If you are following what? The Fibonacci. You couldn't trade unless otherwise. Are we together? But now, let me tell you one thing. Now after forming this block, it means this block was formed after this coin have closed above 0, and that's when they created this block. Therefore, if we close above 0, just know the next target is line -23 and line -38. Therefore, I will definitely come here and I enter the trade targeting these areas, and from there my drop will be from where I entered from to the discount level. This is the discount form. Sorry, this is the discount block down here. My drop should be up to the discount point. Therefore, using Fibonacci, my take profit is here. Using smart money, my take profit is at equilibrium block. Because I told you from discount, automatically market will have to first go and test the equilibrium block. For long-term traders, there you are good to go. You could wait for your 5 to 6%. Are we together? Are we still together, or you are lost already? Are you lost?
We are still together.
Hello, sir. Good morning, sir. Please, can we ask question?
You have a burning question currently?
Yes, because setting this FIB setting on TradeView, I seem not to be getting it right.
Are you sure?
I'm currently I have a TradeView before me, and when I put the FIB, it's not giving me auto FIB replacement. I think that is the right one.
Yeah, it is auto FIB retracement. That is the right one.
And when I click on auto FIB replacement, what is the setting? What is the setting to give you the right information?
So you want the settings in short term?
Yes, sir.
Okay, now you be ready with your phone and take a short screen. I'm going to show you. Now we are going to look at those settings. Yes, this is Fibonacci, and we open FIB, and now these are the settings. These are the settings. Make sure you have extended right. You extend right. You put a tick there. Show price.
Okay.
Put a tick there. You take a short screen. Then as I'm reading for you, take a short screen. Then I will again scroll. Then you take a short screen. Show levels in front. Show levels, we put a tick. Then in front we have what we call the percentage. But for you, you will find their values. Put percentage. Put percentage. Then from there, labels position. Make sure you have right. Don't put left, put right. Then here, On transparent background, you will find 85. Leave it there. Now, the problem is here on these numbers. These numbers, they are numbers here, but they are the ones that will turn into the percentages on the chart. Now, let us take a short screen. Part 1, take a short screen. Take a short screen, this is part 1. Where there is a tick, put a tick. Where there is no tick, don't put. I think short screen is done. I'm scrolling for the next take short screenshot. This is the last one. Take a short screen again. The last one. Let me hope. So where we have tick, put a tick. And after, make sure you save as default. Come on the 3 buttons here. You will find there the 3 dots. You click them, then you will see the word save as default. After putting the settings correctly, you save, you click OK. Definitely, your chart will be looking like mine, having 100, 0, 50, 23, 51, rather 50, 61, and 78 in percentages. I'm done with you.
Hello, sir.
Yes.
The label position, my own is permanently on left. It's not shifting to right.
Which one?
Okay. He said the label position has to be right.
Position? It is label position. In front, there is a box where you click and you get the word right.
Okay.
Yeah. Okay.
Okay.
Now
So-
from there, using Fibonacci, we have seen that at this point we could not trade because we wanted the market to touch the 50 line, but it never touched that line. Therefore, at this point we could not trade. But using again Fibonacci, we could definitely trade after this coin has closed above 0. And again, we can see the smart money creating for us a block, which is giving us hope that since there is a block, this market can drop and test the block and can continue. Are we together? Using the Fibonacci, we decided to enter from here, targeting maybe 23 and 38. But using smart money, it is showing us that our first take profit must be within this bearish block. Are we together? This bearish block. Again, it should be at the equilibrium level since we are coming from discount level. You see, we are using 2 indicators at once to give us the clear picture, to give us the take profit, to give us the drop. But if you have one indicator, you may end up not trading. You may fail to get the corrective drop. Are we together? Then let us look at another coin and we see, what if I want to trade the features? Hey, someone may ask, what if I want to trade features? What can I do? What can I consider? You know, hey, it is okay. Me to show you, it is my job. Now we are here. Now I've changed it to 1 hour. Like for those who have been coming to my inbox, which time frame do you consider for spot, maybe for features? And this is now. This is you. This is the 1 hour time frame. The indicators are there. The blocks are there. What do we consider? This can work on both features and spot. Features and spot. Now, one thing that we need to understand, make sure you know the distance. First look at the distance. Am I safe? What is the distance between the current price and the discount level. If it is too far and you are not on spot to have enough drop, my dear friend, don't bother to trade. Microphones. Put off microphones. Put off microphones. Who is now shouting for us? Put off microphones, Christine. You're Christian, Christine. Thank you, Kale. Wherever. So, now, this is 1 hour time frame. If we want to trade features, if we want to trade spot, it can also work. We are on 1 hour time frame. Now, we are moving with the market. Market has formed discount level. And again, it has formed what we call the fair value gap, whereby we were expecting this market to come back into the fair value gap, but unfortunately it failed to do that by forming another block. There you are not yet traded. Are we together? You are still following the market and to know where to trade from. After forming this block, the market went up to this level here, but it dropped all the way from here to here. What you should know, this fair value gap and this block, this area is very strong. If there is no something big happening in the crypto space, this market is not supposed to break this area. Now, therefore, if I come and I trade at this point here, when the market tested the fair value gap here, and knowing that below we even have another block, my dear friend, your stop loss must be below this block. We are not supposed to come and break it. Are we together? If there is nothing happening in the market, market will always respect this area. We have block, and again we have a fair value gap. We may not have a fair value gap always. We may have a block alone. Therefore, at this point here where I'm pointing, the market was testing the block. Are we together? It tested the fair value gap, it tested the block at once. Hope I'm clear. Now, what is your take profit? Your take profit, it's what you want. What do you want? You want 1%, you want 2%, or you want 3%. Now, when we measure, for those who take 2%, your take profit was here. Okay? But the main target, according to the analysis, it was supposed to be this area. This week, it is the last high. Therefore, after respecting this zone, we expect the market to break this week. Are we together? Meaning, our take profit was here. That was our take profit. But if you wanted only 2%, you could be getting out at this area. 1%, you could be getting out at this area. Are we together? But your stop loss is here. Please put it there. Please, and please, I beg you, put the stop losses. Otherwise, if you don't put it there, you will find your account empty. You have been busy up and down. You don't have stop loss. You are trading under close. I know most of you can forget to change from close to isolated. You will find the account empty if you don't put stop losses. Accept to lose, because in futures trading, you either lose or win. Therefore, you must put the stop loss. But the question is, how many winning trade will you win, and how many losing trade will you lose? That is the main question. In futures trading, it is as a must. The losses are there. But the question is, how many losses do you want to allow, and how many winning trades will you allow? The winning rate must be greater than the losing rate. Come on, guys. As you have been seeing the signals that we have been sharing, at least the two signals may hit a stop losses, and the rest, they are winning. Are we getting a point? Now the question is, when you hit two stop losses, will you lose all your account? Then what about the money you have been making? The question remains to you. We said we are entering when the market is testing our block and our stop loss is here. If you want to trade it on spot, then it is the same. You are entering here. But for you on spot, measure margin call Z. Margin call Z, the drop is 6%. Therefore, I will have a drop of 6%. Whether I will decide to have 6 margin calls, each drop 1, it is okay, as long as you are covering up the drop. Am I clear? As long as we are covering the drop, then that is okay. Now, our take profit is here. You could wait for this 3.9% and you enjoy. Now, we can see at this point here a indecision candle here, which is called a doji. If I zoom it, you can see it. It is there. It is there. Let me first remove this. This is the indecision candle I'm talking about. Are you seeing it? It is a plus candle. You can see it. It is a plus, but its name, it is called doji. Okay? It is indecision candle, showing you that the buyers and sellers, they are not deciding. What next? What is the next candle? Next candle, it is the decision one. Indecision is this one, then the decision is this one. How many have you copied that? Have you copied that?
Yes.
Now, without indicator, it would be hard for you to know that, oh, this is a turning point. It would be hard for you. That is the fact. You would say, at this point, indecision candle, for what? My dear friend, that was an uptrend. But now, when we turn our indicator on, at this point, market created a block. Can you see the block? Market created this block. The indicator of smart money created this block. But now, remember, after creating a block, for us, we want the market to come back into the block. This one is done. And this fair value gap is done. What we have currently, it is this block that was formed here. And here, market tested the block. Guess what? Which type of indicator is there? Which type of indicator is there? Oh, my dear friends, who understand in the candles, where are you? Can you wake up? We have a candle there, which is red one. It is a pin bar, but which type of pin bar? Ah, God. Now,
Morning star.
at this point, we can see a rejection candle. But the rejection candle is happening on the block that we created here. This is a block. Now the market is testing the blocker to confirm you that you know what, it is time for us to move on. You can either wait for decision candle. I told you this is indecision, and this is the decision. The market has decided to be bullish. Therefore, I will come here, I enter the market. My target is this one and this one. Here, it is a previous high, and here, it is the major high because of this. Now here, I may consider this one as my main take profit. I measure from there to here, that could be 1.7%. And on futures trading, the 1.7% will be according to the leverage you are using. The X you are using. How many X's are you using? You are using 5, then it means 5 times 1.7. You are using 3x, that means it is 3x times 1.7. That is the futures trading. For you who was trading it on spot, it is the same. You have measured your 1.7, then what is your drop for you? Because you have to buy margin calls. You have to buy margin calls. Without using indicators, we all know that this is the main drop, the main support here. Because the market changed the character from this point. Now, this line here, it is our demand zone. Therefore, if I enter at this point, my margin calls must still be running all the way from here to here. Simple. Is this one hard? Is this one also hard? It is not. Just know how the market should move and know how can I be able to protect my capital. I've showed you where to put a stop loss. Then another thing, how to measure your drops. You get the point? Now on this point here, if we turn on the indicator, I want to show you where you could put a stop loss. Now, when you turn on this indicator, of course, we are seeing now we have a block. And market is testing the block. And now here, we have a fair value gap. Automatically, this next block was tested. Therefore, our stop loss could be below this fair value gap here. Down here. Are we getting the point? This is our stop loss. And don't buy margin calls while you are trading features. You are increasing on your losses. Are we together? We have seen how to use Fibonacci. We have seen where to put stop losses. We have seen how to measure drops. We have seen where to enter from. Now what else do you want? What else do you want? Now, currently here, we have two blocks. 1 and 2. The market is just here. And guess what? It has tested the premium. What next do you want? Do you want to force yourself and trade here? Can you? You cannot. Remember, that is 1 hour. That is 1 hour. Now let me see. I think I shared this coin. Let us check it before we go further. Let's shift it to 4 hours. Then this is the coin I shared. Now this is it, and this is what I considered. This is the coin I shared in the morning to take our 4%. I think it was around 4%. Yeah. Okay. Now, when we look at this coin here, we retested our equilibrium zone several times. 1, 2, and 3. Finally, we respected it. We formed what we call the change of character. The change of character. But before the change of character, we have a block which is valid here. We have a block which is valid here. I believe this time, this count level is very far. You cannot consider it. And we don't expect the market to come back here because of the sag that happened. The discount level is very far. So don't consider that currently. Now what we do here, what I considered, the market closed above the 0. Are we together? It had failed to follow the structure. After moving all the way from 100 to 0, it failed to come back halfway to the 50 line. You get the point? It stopped between 23 and 38. Then it went up. Therefore, after closing above 0, we can see block formed and fair value gap formed. I know that this market can simply drop to this area, then it can move up. But my drop is up to here, 20% drop. Are we getting the point? 20% drop. Remember, considering the smart money, we know that the market is coming to this bearish block. We know that the market is going to break this level of the fair value gap, negative 61. Therefore, I can say, you know what? Let me wait up to here, 14%. I have a drop of 20% down. You are trading, remember you are trading spot. I shared this coin on spot. I have a drop of 20%. My take profit here is 14%. I can put it on cycle. Then my limit price, I can put it here at the top here, and I think it is around, it is around 0.1149. That is the limit. If we reach there, we don't want to buy again. Are we getting a point? Now it means here I considered the boss. I considered the smart money, expecting the market to respect this fair value gap and this block, and again I considered the fib after market closed above 0, whereby we expect it must first go and test line 23 and 38. Now I shared this signal to take 4%. To take 4%, because I know it will break this level. Are we getting a point? This was the level, the highest point. Now by coming back, it will have to break it. Before breaking it, that is our 4%. Have you picked something? From today, can you be able to measure your drop? I believe the 60 people that were here, they can represent the rest. They can represent what? The rest. So, while you are trading features, you cannot risk here. Here it is a bit far. When you turn into 1 hour time frame, you can see that you are not supposed to trade there. While you are trading features, the features here, no way. On 1 hour, there is no your entry. That's why spot is always better. Spot is always better. Now that is it, I think. Maybe if you have some questions, that is it. Do we have some questions?
Coach, then namu ekibuuzo. Photofib ogissaako njiraba kati weetuuka wali ku 0. Akatale nga kambuse ku 0. then ate we kasigala kambuka aina gundi ze creating ezo za negatives. Ze ndi mu kubuuza kati ezo kati tuzibala tutya?
Can we speak English, please?
I'll answer in English, don't worry.
Thank you, sir.
Okay, I get it. I get your point. Okay, let me show you. He's talking about the negative points that we have up here. He's talking about these ones. Are you seeing them? I hope you are seeing them. He's asking about these negative. Negatives are 65, negative 38, negative 23. You get the point. And I think we have agreed that whenever market closes above 0 and you have smart money, we have somewhere here a block. Just know that coin has capacity to give you money. By entering after closing above 0, this market can definitely come back to the block, or it can move to negative 38. Now what you do, you will come here and enter your trade. What is your target? You want 3%. 3% goes up to here. What is your drop? For you to be safe, don't count this as a drop. 4%, no. Go here to be safe. Now this is 15%. For you to be safe, don't mind about these values that it is in negative. No. For us, we follow the structure. The negative, don't mind about them. When you measure your percentage, it is positive. It is not negative. Therefore, if we close above 0, we have a block down here, then you don't need to ask as long as you're trading spot. But just know, me what I normally consider, I will look at the previous performance. If we reach here, then we are targeting here. We are targeting this area to break it. Now I will put the line. The line is at the same line with the percentage of Fibonacci, the last percentage I can pull to this area. Are we together? That is the difference of someone who is focusing on signals and someone who can be able to go to chart and do analysis. You do analysis, you take 6%. You wait for signal, you take 3%. So you choose. What do you want to do? Do you want to wait for signals, or you want to go to chart and get your own signals and you enjoy? Aha. Now come back to here. This block was formed nearby the discount level. It was formed after market closed at this point. After this rapid raise, that's when the block was formed. But you can see, market again dropped all the way from here to test this block because it was still valid. Guess what? After testing it, and now it is respecting the block. You get a point? Now here, at this point, you could trade on features now because it is nearby the discount level. This block is nearby discount level. Then here I can trade looking for my maybe 3%. Then my stop loss here, down here the block. Are you seeing the difference? With features, you must be very careful. The market shouldn't be so high. But with spot, you can trade here. Features, you have to be careful. You have to be careful, I repeat. That's why it is not easy to get the features trading all the time. At times you feel like, oh my God, I will not share this. Are we getting the point? Here, for the spot, you could do, again, look at the equilibrium. You take your profit. On the safest side, you can trade between discount and equilibrium. Looking forward to enter after discount, your take profit is equilibrium. That one is not hard. It is not hard. As long as you see the change of character after discount level, then your take profit should be at equilibrium. Whether it is 20%, if you can wait, then it is okay. Wait for it and enjoy it. You see? Now this coin called the DIA, it has been down here on a discount level. Now you can see what happened. Now assume you entered here looking forward to take profit at the equilibrium. That was 36%, but you missed it because of lacking knowledge. Oh, you could look at this previous high. Where is it? It is here. Then take that one. Take that one. That what? That is what? 16%, and you are out. But you know what? Whenever we share a percentage, 10%, 16%, you feel like, oh, this one will take long. I will not trade it. When will you be used of taking those high percentages? Any other question? Any other?
Coach, good morning. Yes, good morning. Good morning, Coach.
What is your question? Morning, how are you?
I'm fine. So I'm one of your new students. Please, can I have a trade setting on spot for $50? Because I've not been trading sports. Please, but I'm doing
trading sports.
Yes.
Now, the settings, they are always based on the decision that you can make. We have different decisions. We can make different decisions. We can also have different settings according to our understanding or according to what you want. Someone with $50 on spot, you can find someone using $5 as first buy, using the double up strategy. You can find someone using $10 as first buy with 4 margin calls. It means you are remaining with $40, meaning each margin you want to buy with 10. That is strategy number 1. Then you can again have, maybe I write for you here, your $50 is here. You have 2 strategies only that you can use. So it's you to decide, not me. I cannot decide for you 100%. No way. I'm making you lazy. Now, after here, you are going to use, now for example, if your first buy is $10, you are going to use $10, $10, 4 times, $10 and $10. Are we together? We are here.
Yes, Coach.
But now,
yes, Coach.
The question will come in. Which drop are you covering this side? Which drop are you covering? We have seen that some signals you can cover around 20%. You can cover like around 15%. Now the question comes in. Will these 4 margin calls cover 20%? If it is yes, then for you will be forced to use 5 as a drop, whereby that 5 is too big. And the method you're using here is not affecting that. It is not affecting anything in the market. Your coin will be negative. This strategy could be good when you have measured that at least the drop can be around maybe 5%, maybe 10%. You get the point. But if the percentage is too big, don't use this strategy. Am I clear to you? This strategy can work when the drop is very small. For example, maybe you have a drop of 2% here. You have 2%, maybe slow. You have 6%, or it is 8%. This strategy can work. Now, let us look at double up strategy. With double up strategy, I believe here you can use 5 as your first buy out of 50. It means the next buy will be 10. The next buy will be 20. When you get 20 plus 10, that is 30. 30 plus 5, that is 35. Now, what is
35.
the balance? What is the balance? The balance is 15. Now, the 15 is not doubling the 20. It means with the double up strategy, you are forced to have only 2 margin calls. And the balance will remain there. Because you cannot buy with 15 down here, yet 15 is not doubling the 20. The next would be to have at least 40. I think I'm clear. Are we getting the point? This one is not rubbing out. Why? Let me choose another one maybe. Okay. Are we together? This one?
Yes, coach.
Yes. With your $50, you either choose to use the double up and you have only 2 margin calls, or use this after measuring the drop. Are we together? If the drop is not more than 10%, then this one can work. But if you see that it is more
But
than
coach,
that,
your drop normally 15. Your drop normally 15 drop.
what?
I said your drop is normally 15 drop that you normally put.
Now you hear this one.
Yes, coach.
Have you been in the class? Or you have just come in?
On the signal, you normally drop. I'm just
Don't
coming,
mind
sir.
about,
Just coming.
don't talk about that drop on signals. I've cleared it here. I've told you why I normally put 15. And as if maybe you have just joined the class. I told you that
They
one
said
is
it's
for
for emergency.
emergency.
They said it's emergency. Yes.
Don't focus on it. Go to the chart, measure the drop, the real drop. And I have showed you how to measure the drop. Are we getting the point?
Yes.
So with your $50, you have only 2 strategies that you can follow. Either your first buy is 5, you have 2 margin calls. Or after measuring a drop, if it is not more than 10, then you can have the strategy. First buy 10, then 10, 10, 10, 10 as you are covering up your drop. But otherwise, that is it.
After measuring the drop, sir, we divide it by the margin call we have. That's
Yes,
what
yes.
gives us the ratio.
Get the number of drop. If you have measured, for example, let us assume you have measured maybe here 10%. Now you will get your 10% divided by the number of margin calls that you want to be having. If your margin calls are 4, then get 10 divided by 4. What you get, it is your call drop. It's what you will put it here. All together, you will put it here. Am I not
Okay,
done?
thank you, coach. Thank you.
Yeah.
Yes, thank you very much.
I think we are done. Ladies and gentlemen, are we not done? Do we have any question there? Oh, we are okay, we are good to go.
Coach, but as a new student, you still have to.
You have to.
Hello. Hello.
Yes, please.
Yes, coach. Just a simple question.
Yes.
I wanted to know whether this call has been recorded. I've enjoyed. First of all, I want to thank you for the very, very precise presentation. It's been very educative. I wanted to follow up and learn more from it. I don't know whether you're recording it.
Yes, I recorded the class. You'll find it there.
How can I get it?
Oh, good. Are you not in our group where we normally share the links?
This is Explorers. I'm on Explorers.
Explorers. Now you will go to our YouTube channel. It is called MRD Crypto Trader. You get
MRD.
MRD in capital letters. Then it is Crypto Trader. You space it, yeah. Then when you open that channel, there is videos and live. So you go to live, okay? Then you'll find our all recorded live. You will find them there. Then on video side, I normally record with phone. I post there some videos, so you can check on both. They are all they can all give you some knowledge on trading, both on videos and live side. All together.
Okay.
Yeah, you can get it there.
All right. Thank you so much.
Okay. So considering to this again, this Fibonacci, like I told you, I think we talked about on uptrend only, but when we are in a downtrend, zero now this time will be down. 0 will be down, 100 is up. And I told you from 0 we trade up to 23 or 38. All together, we enter the trade when it is around 0 and it has not yet tested 23 and 38. There you are good to go. You can get a certain percentage that you want from there. All together, I think I'm clear on that. So that's how we trade the downtrend. The downtrend 0 is down, and we trade. We enter at 0. We come out at 23 or 38. Is that one also hard? It is not. It is not hard. Okay, I think that is it. We meet on Wednesday. We meet on Wednesday, guys. Thank you for coming.
Thank you so
Thank you,
much.
coach. Thank you.